Have you ever wondered what money would look like if it wasn't controlled by any government or bank?
Hmm,
What if there was, say, a digital currency that promised ultimate financial freedom and privacy?
it's a powerful idea.
Today, we're taking a deep dive into Bitcoin, the groundbreaking cryptocurrency that really launched this whole decentralized finance revolution.
It certainly kicked things off in a big way.
We're going to try and get our heads around the blockchain, digital assets, and how this innovative financial technology is shaping the future of money.
Yeah, cutting through some of the hype, maybe?
Exactly. We want to cut through the noise, give you the essential insights, maybe some surprising facts you need to truly grasp this global phenomenon.
Seems good.
Our mission really is just to unpack the core concepts of Bitcoin, what it is, how it works, why it matters, so you can feel informed and hopefully empowered by this knowledge.
Good goal. So, where do we start? Financial independence.
Yeah, let's unpack that. True financial independence. Unlike, the dollars or euros you carry, Bitcoin doesn't have a central bank.
Right. No government issues it. No single authority backs it up.
It just appeared, didn't it? Back in 2009 from this mysterious figure, Satoshi Nakamoto.
Still a mystery today.
And that absence of a central controller, that seems to be where the real innovation is.
Absolutely. And foundational to its design is that Bitcoin runs on this decentralized network, the blockchain.
Okay, the blockchain. I hear that term all the time.
Think of it like a shared public record book, a distributed ledger, but one that's crucially immutable, unchanging, and secured by cryptography.
Distributed means.
It's kept simultaneously on thousands of independent computers all over the world. They all maintain the network together.
So who's actually in charge then?
That's the elegant part. No one, or perhaps everyone who participates. This decentralization is Bitcoin's radical promise. It's like a digital rebellion against that traditional centralized control.
It really forces you to rethink how systems can even operate without someone at the top.
It does.
But, okay, if no one's in charge, how do new Bitcoins get created? And how do we know transactions are, legitimate?
Right. Good question. So new Bitcoins are mined.
Mined, like gold.
Sort of, but digitally. Powerful computers solve these really complex cryptographic puzzles,
Okay.
and solving these puzzles does two things. It verifies transactions, grouping them into new blocks, and adds those blocks to the chain.
The blockchain.
Exactly. And the first miner, the first computer, to solve the puzzle gets rewarded with newly minted Bitcoins.
So that's the incentive.
Precisely. It's not just about making new currency. It's this ingenious mechanism that validates every transaction and keeps the whole network secure. Trust without needing a trusted middleman, like a bank.
It's definitely more than just a currency then. It feels like a whole shift in how we think about value and trust.
It is.
Which brings up a question for you, listening right now. What specific problems does Bitcoin actually aim to solve, especially compared to, say, traditional banking?
Well, connecting this to the bigger picture, Bitcoin tries to tackle several key issues. First, it cuts out the middleman.
Peer-to-peer.
Exactly. You can send money directly to anyone, anywhere in the world, often with much lower fees, particularly for international transfers. Think about global remittances, for instance.
That's a huge market.
Huge. Another aspect is privacy, or maybe better termed, pseudonymity. You don't need to give your name or address to have a Bitcoin wallet.
Just a digital address.
Just a unique digital address. This offers a level of financial autonomy that was pretty much unimaginable before for many people.
You mentioned pseudonymity, not anonymity. That distinction feels important. Our sources highlight that too. Can you elaborate?
Absolutely. It's crucial. While your name isn't attached directly, every single transaction is recorded publicly on the blockchain, permanently.
Tied to those wallet addresses.
Tied to those unique addresses, yes. Strings of numbers and letters. So while it's hard, it's not impossible for authorities or others to potentially trace transaction patterns and maybe, eventually, link addresses back to real-world identities.
Okay, so not completely hidden.
Not completely, no. It's an important nuance. And another defining feature, Bitcoin's fixed supply.
Ah, yes, the famous 21 million cap.
That's right. It's hard-coded. There will only ever be 21 million Bitcoins in existence. Period.
Unlike traditional currencies where governments can just print more.
Exactly. No risk of inflation from, endless money printing by a central authority. The last Bitcoin is expected to be mined somewhere around the year 2140.
Wow. So it's inherently scarce.
Inherently scarce, a truly scarce digital asset. And that scarcity is a key part of its value proposition for many people. They see it as a potential store of value, maybe like digital gold against inflation.
So you have this fixed supply, decentralization, peer-to-peer transfers. It paints this picture of a really independent financial system.
It does.
But like anything revolutionary, there must be challenges, right? Practical complexities. What are some ongoing debates around Bitcoin?
That's a vital question, absolutely. While Bitcoin offers these incredible potential benefits, its decentralized nature also means it operates without the kind of consumer protections you get with traditional banks.
Right. No FDIC insurance equivalent.
None. And because its value is purely driven by supply and demand in the market, its price can be incredibly volatile. Huge swings.
Which means risk.
Significant risk, alongside the opportunity, of course. These are really inherent characteristics of a truly free market digital asset. It sparks constant debate about its role. Is it primarily a medium of exchange or more a store of value? It's a very dynamic space.
Okay, so wrapping this up, what does this all mean for you, the listener? We've explored Bitcoin, this digital currency, mysterious origin, fixed supply, presenting a direct, often low-fee alternative to traditional banking.
Yeah, it emphasizes this powerful, almost philosophical shift in how we perceive value and trust itself.
It really is like a digital rebellion against centralized control. It's pushing us, compelling us to rethink the very nature of money and who gets to control it.
So, as you think about this, consider how such a decentralized system might influence not just your financial transactions, but maybe the broader landscape of power and trust in our increasingly digital world.
Yeah.
What new solutions or perhaps challenges does a world leaning more into cryptocurrency truly present for your financial autonomy, for innovation?
It makes you think. Remember that story about the Bitcoin pizza back in 2010?
Oh, yeah, the 10,000 Bitcoin pizza.
Two pizzas, bought for 10,000 Bitcoins.
Yeah.
It's just a stark reminder of how perception, scarcity, and tech innovation can totally redefine what something is worth.
What seemed like nothing became worth millions.
Makes you wonder, what else might we be underestimating today?